and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm very fortunate today to be joined by Niji from AgentSync. Good morning, sir. Well, is it morning where you are?
It is. It's like 9 a.m.
9 a.m. Yeah, no, thank you. I get so confused because we sort of jump around the globe slightly on this one. But usually different coasts of the US, which I'm consistently getting wrong. But it'd be great to kind of thank you for joining us on the podcast, and it'd be really useful to, before I kind of murder what AgentSync's really trying to do, it'd be great if you could do a little intro to the business and what you guys are up to.
Yeah, thanks for having me, Alex. So first off, my name is Niji. I'm the co-founder and CEO of AgentSync, and AgentSync is a insurance broker management and compliance solution for the insurance industry. So we serve insurance carriers, insurance agencies, and managing general agencies. So basically, if you're touching the transaction of an insurance policy in any way, shape, or form, we provide and really support the onboarding, compliance, and broker channel management.
Awesome. There's a man who's been through some pitching rounds. Got that down. I was going to ask you, because you're sort of tackling the kind of non-sexy area of the market, right? No one gets out of bed and gets too excited about the compliance side. But obviously we've not met before, but I've talked to some of your guys, and you've got a really interesting origin story. Like this business comes from a really interesting place. So I wondered if you'd indulge us kind of like where this idea comes from.
Yeah, for sure. Well, for the record, I think broker compliance is incredibly sexy. So yeah, with that, kind of going back to, let's say, 2014, actually going back even further. So I co-founded a company with my wife, Jen Knight. We actually met at LinkedIn over 10 years ago. She was the technical architect on the business technology team there. I was managing a sales ops team. And we worked on a bunch of projects together and really started dating there. And over that time frame, I actually went to Ireland. I lived in Ireland for about a year, and then came back. Jen went to Dropbox, where she led the biz tech team there, and then went on to Stripe, where she led the same team there. And actually joined us, full time about a year ago. And she was working in AgentSync kind of nights and weekends while building out a team of 40 people there. So she's a trooper. Wow. But I went on from LinkedIn, went on to Zenefits. For anyone who doesn't know Zenefits is a HR, payroll, and benefits platform for the SMB. So I joined the company back when it was about 100 employees to lead the sales strategy and operations team. We grew way too quickly from 100 to about 1,700 in a year and a half. And throughout that hyper growth, we didn't put the right systems, processes, really management in place around regulatory compliance, and got into some pretty hot water, basically facing producer licensing violations across every jurisdiction. So at the time, the CEO, Parker Conrad, had me drop what I was doing and partner up with our general counsel and our legal team to get our arms around the issue, develop a plan, and go execute on it. I knew a little about producer licensing, but definitely not to the extent that I know about it now. But I was kind of thrown in head first into the wonderful world of insurance broker compliance, and spent the next 22 months building internal controls there, and then also working with state regulators to get back into good graces, convince them we were a change company, and eventually settle the violations that were outstanding. So once we did that, took about 22 months, very painful, but ended up leaving the company to take a shot at creating the kind of the first modern piece of technology in this, as you mentioned, it's an unsexy corner of an already, fairly dry industry. I think most would agree. And went out to really tackle this problem with my wife to create basically a really seamless experience between the insurance broker and insurance carrier. So basically, closing that loop in this massively fragmented industry. In the U.S. at least, there's roughly 200,000 agencies out there. There are insurance agencies. There are 2.3 million individual brokers, and then there's 6,000 underwriters, and there's MGAs kind of sprinkled in the middle. Extremely fragmented, a lot of different touch points. So we're really tackling the management compliance layer that sits across those parties.
Wow. Well, there's a lot to digest there. I was just thinking, as a hit list, between you and your wife, you've got quite the kind of logo list in your wake. Why did you end up dealing with the kind of getting so heavily involved in kind of resolving this? I didn't want to call it a scandal, but the thing I looked up was Zenefits, and then the first thing coming up was scandal, and it was the New York
Scandal, yeah.
Times.
Yeah.
But why were you running point on that compliance bit from a kind of sales ops point of view? Were you just foolish enough to put your hand up, or how did that come about?
No, I mean, honestly, at the time, I was not super pumped, right? I had just kind of established this career in sales operations. That was my skill set, you know, what I thought was going to be my career. And then I was asked to basically kind of, what I felt like in the moment was kind of jumping on the grenade and taking one for the team, to go focus on this problem, and, you know, playing more of cleanup than the look forward. Mm-hmm. And the problem statement intrigued me at, you know, at this level that was super interesting at the time, because there was, you know, saw this huge gap in the market where it's this very complex kind of web of contracting and compliance credential verifications and submissions in every state. And we're talking about, you know, a complexity that, you know, boggles the mind. So there's, let's say you're licensed in 50 states, and you are working with 100 different insurance carriers. You basically need to have your licenses for every single state you're transacting, and then you also have individual appointments by state for those 100 carriers. So the amount of paperwork and credentials adds up really, really quickly, especially if you're an insurance agency like Zenefits was, and you're trying to scale very quickly. It creates an enormous bottleneck to your ability to scale, and there's nobody that's focused on this problem. So saw an interesting opportunity, you know, to work on a very worthy problem for a very real industry. And so really we built on our, Jen and I both built on our experience that we've gained, you know, over the last decade or so, kind of building internal tools and building really sales tools at the end of the day. Mm-hmm. Another thing to note, we're built on the Salesforce platform. So Jen and I both have a ton of experience doing that, where essentially we were building internal tools at LinkedIn together, where her and I would do the kind of the product design. We would, you know, basically tools to support our sales development function, where we built these efficiency tools that would grab a bunch of LinkedIn data, augment the, you know, the prospect or the sales record, and then have these automated triggers for things that happen on LinkedIn for us to take action on them. We deployed this, essentially the sales console, across every geography globally, and ended up getting kind of adopted really quickly. So we worked on a ton of these types of problems where we were taking a complex issue or complex problem statement, and then building technology on it to you know, enable and really support the priorities for the business. And that's really how we're thinking about this problem for the insurance industry. So we both came from you know, really great companies, and seeing just a crazy amount of ups and downs and sideways, and came together on this to take, you know, the best of what we've picked up in our career so far to, you know, create a company in the way that we wanted to create it.
Yeah, awesome. And I want to get onto that, because I know you've got some really strong ideas about kind of, you know, what it means to grow a company like that. But I just wanted to focus on the compliance bit as well, because obviously mockingly called it yeah, the non-sexy bit. But I think, yeah, the more you talk about it, and the more you know, I was just thinking about, because of the legislation, you know, the legal arena in the US is so complex. There's a huge kind of barrier to entry, isn't there, for that industry, and so therefore you're kind of slowing the evolution of the kind of consumer experience as well. So, you know, as much as the compliance area might not be that, you know, in terms of the kind of exciting, but it kind of, it's a massive prohibitor to not only growth but entrance to, you know, individuals looking to scale. So it does a lot there, which is desperately needed, I would say. Oh,
absolutely. Yeah, so it's an interesting kind of market and interesting time to really enter it. So we, you know, honestly, we didn't quite realize the company was going to be, or this market and product market fit was going to be so strong. There's going to be willingness to pay around this type of solution at the scale that it actually we see today. So we went into this thinking it was going to be a bit of a smaller kind of addressable market, and quickly realized that across the board, from insurtechs to insurance companies that have been around for over 100 years, to these kind of newer MGA models that are doing really well. There's an enormous demand for this type of software, because one, for the insurtechs, it enables them to scale really quickly. So what would it took probably 20 humans, working around the clock to get brokers onboarded, contracted, verified licenses, background checks, all the individual regulatory filings by state, to let's say get them onboard another like 2,000 agents month over month. It would take at least 20 people to actually do that. So we support that use case really well, where we take that bottleneck out. We take all these compliance rules, we translate them into software and really into code, and so it just programmatically goes to the business rules to figure out exactly what they need, check it, and if it's not, it creates basically an exception list of all the issues that need to be chased down. So it does all the heavy lifting, allows these folks that would just spend a ton of time doing paperwork and manual repetition of at a scale that's just, it really blows my mind. So we do the heavy lifting to give them the time back to focus on more strategic initiatives for the company. And it allows these folks to scale really quickly and removes that bottleneck while putting a layer of visibility on top. So at any given point, the CEO or the general counsel can log in and see a license completion rate, basically what your compliance health score is. So we have a ton of visibility to give kind of founders and leadership the comfort and the trust that this is going well. Where previous there's no good way to make sure that these 20 folks that are working in spreadsheets are doing the right thing at all times. Right. So this type of solution makes a ton of sense for insurtechs, and if you look at our website, you'll see all the logos there. We have a ton of the sexiest insurtechs, I'd say, right now, but we also support the traditional kind of incumbent players really well in the same way, but really giving them the ability to nail these digital transformation issues. So one thing that's I think everyone realizes is happening right now is with modern technology kind of entering the industry, and you see a ton more investment and these insurtechs kind of popping up left and right, it's going to take market share away from somebody. So these folks that have been around a really long time and built a business over 100 years are one, looking to make sure they can stay competitive with these insurtechs popping up, and a lot of that plays into the amount of tech debt that usually exists in these players that have been around for a while. And so we are helping modernize to drive digital transformation and allow them to scale up really quickly if they need to without having to scale up headcount. So we're serving both. We're serving both really well.
Yeah, it's really interesting. That tech debt comes up a lot in the podcast, and we talk about. It's interesting though, because when you look at data, there's the argument is there's bigger opportunities than in legacy insurers because they've got so much data and they can create kind of greater return on investment on things like data. But it's kind of, I don't know, we're not specifically talking about data, but when you're looking at kind of changing the tech and the kind of legacy that's built up there, the tech debt it's the kind of balance. And it's interesting what you guys can offer off the shelf. But bear in mind where this came from. I wanted to ask you this sort of question, and I hope it's put the sort of right way. But essentially, the kind of what happened at Zenefits was kind of a bit of a fail within the organisation, and obviously you've sort of come out of that, and there's a huge kind of learn, I would imagine. Do you think like failure is really important to being successful?
Yeah, it's a great question. In our situation, very acutely, if this hadn't happened at Zenefits, I mean, we wouldn't be here right now talking about AgentSync. But I think and this is a very specific kind of example. But taking a bit of a step back, just thinking through, both Jen and I's career so far. I think absolutely you got to fail a ton of times to really push the envelope in a way to understand what you can do, where your personal limitations are, and that's the best way to learn, is to fall, face first on a problem, on an important problem that you're trying to solve. And so we've done that in our careers so far, at both LinkedIn and for me LinkedIn and Zenefits, and for her LinkedIn, Dropbox, and Stripe. And we've seen what didn't work a ton of times, and that's almost more important to understand what won't work versus what will work. And we've used these kind of data points and learning to help craft what we feel, based on our experience, is going to be the best of all the companies that we worked at. I think from that regard, failure is incredibly important. This is our first company though, so take that with a grain of salt.
You have to. You're supposed to do all the failing on someone else's money when you're being employed.
Exactly. Yeah. Yeah, and that's actually been like a very kind of interesting thread throughout as we start the company. We bootstrap the company to really find product market fit and willingness to buy before we took on an outside investment. And that was a big part of it. Was really I think any other founder I know would quickly just go to raise money on the idea and then kind of figure it out from there. And we've taken a very metered and conservative approach to this. Coming from just seeing what we have in our past and seeing what can go wrong and how quickly it could go wrong. We wanted to take a very metered approach and thoughtful approach to how we built this, and the financial metrics were at the heart of it. So we wanted to make sure we actually got to cash flow positive before we took on any outside investment. So it's been a theme throughout our company history that even though we have a ton of cash in the bank now, we're still very laser focused on the P&L and making sure that we're not doing anything stupid.
That's really interesting as well, because I mean, something we talk about in the podcast is cultural difference between fundraising, particularly between Europe and the US, and it, as a generalized rule, and it's a sweeping statement, it tends to be that good idea, good pitch deck, the investment rounds sort of seem to come earlier in the genesis of the business in the US, whereas in the sort of European side, they want to see more bootstrapping. They want to see kind of more the strategy that you've gone down. Do you think that universally holds true, or is that just some nonsense that we've been talking on my podcast for 6 months?
No, it's a very great topic. I think the U.S. from a VC perspective there's just too much money floating around, and so if you look at just the failure rate of startups, actually I don't know this number off the top of my head, but I would bet it's probably the worst in the US, because we give a lot more kind of companies and ideas chances at this, because there's so much capital floating around and so much access to venture capital today. And that's especially true right now as we're talking. It's the VC space has never been hotter. We were able to raise 3 rounds over the course of 8 months. Pretty wild. But I think there's definitely something we said about really bleeding for a business and understanding the going into it. Spending every dime that we spent over in the first year and a half came out of our checking account. So we were in some ways I think it ingrained really great kind of characteristics for us and the way that we managed and really started the business. But at the same time, we didn't make a bunch of bets that we could have if we had venture capital in the bank. So there's this interesting dichotomy between the two, where I think bootstrapping and feeling the pain of every dollar that goes out is going to be really great for the long term. In the short term, not everyone's going to be able to do that, right? We were incredibly privileged. Jen was bringing home a big paycheck. I was able to, leave Zenefits and basically not have any income. Actually, have a very negative income for the next year and a half, and we didn't have kids at the time. And we were just like two kind of dum-dums living in a San Francisco apartment, able to take these type of risks, where most people can't do that. So I think you got to think about your surroundings, the resources that you have available. We're also, not 100% sure how much product market fit would be around this idea. So we want to take a much more conservative approach and then taking a hit on the terms up front as well.
Yeah.
Because if you can't point to a big TAM, and you haven't proven that you can do it, and it's an industry and a problem statement that not a lot of people really understand or can understand quickly, you're gonna get completely shafted when it comes to terms. So we bootstrapped it, got product market fit, willingness to buy. We had a ton of revenue coming in, over $1 million revenue coming in by the time we actually ended up raising our seed. So we're in a bit of a special circumstance in a way. But there's always a risk of creating a bit of a bubble as you're just throwing more cash into the problem.
Yeah, because it's a really delicate balance as well. It's like, you want to raise. I've had this sort of theoretical conversation as well a few times. It's like you want to raise enough to kind of actually do the things you need to do, but obviously not so much that it kind of creates a kind of disillusion with where you are financially. At the end of the day, it's a business. It has to kind of stand on its own 2 feet, and it's dangerous when the business becomes just continuously seeking investment, and that's why I'm always drawn to businesses like yourself that have kind of gone out, got it up and running, and then gone out from wrestling. So just for me, it feels like a more kind of appropriate model of actually, getting to the point where we've got these huge tech organizations that hugely valuable on paper, still don't make money, and I'm still quite baffled by that. I did business economics at university, and I'm like, when is any of this stuff going to be true that I learned? And none of it is. We throw it in the bin. But it is really interesting. So I like when people have got that mindset.
Yeah, I think real quick. Part of that is like I grew up without a lot of money. Just the amount of money that we're spending right now as a business was keeping me up at night for a while. I finally kind of reconciled that, but
really?
We're spending gross without taking account for any of the income coming in. We're spending about $1 million a month right now, and that scares the daylights out of me when I really process it, right? So not coming from a ton of money and being very quickly in a place where we're saying literally $1 million just go into the ether every month. I mean, it doesn't really go into the ether. It's paying our employees mostly and other things, but that is a very real thing that I think it doesn't feel real a lot of the times, especially, you raise so much cash and it's all a bunch of ones and zeros in a computer, and you don't end up actually ever seeing the cash, right? You're just transferring money basically back and forth. It doesn't really feel real, but I think understand the reality of that. Like, that $1 million is a house or two for somebody, right? So kind of putting things into context, I think has been really helpful for us and makes it feel a lot real. But at the end of the day, it's at the same time, if you're trying to go big at all times and test every idea, it allows for more of those to potentially work out in the long run. Where I've seen a ton of founders in San Francisco that will go raise a couple $1 million. The idea will fail and they'll just go big every time. They'll do it, in 1 to 2 year cycles, and they'll just keep repeating that until one hits. And that the argument could be made that is a much more efficient way to do it. If you think about the actual amount of capital going in, the capital coming out, right now it's the liquidation. It's just raining money right now for all these startups that have actually gotten to public markets really, really fast, and all that money's being basically siphoned back into startups now. I think that's what's driving most of the hotness in tech right now. But I think it was Nori just said both ways, but for longevity of the business, I think it is really important that the founders understand the value of a dollar.
Do you think there's something in you and your wife, obviously, if you take the relationship out of it, it's a good founding team, right? You've got sales and sales operations, and then you've got tech know-how. That seems kind of naturally a really, really good fit, where you're going to have that balance of kind of building the right thing and then knowing the value of the dollar, because the sales guys, as much as sales and business development seems to be the dirty word in tech, people need to acknowledge you can build the great thing, but you need to sell it. People need to buy it. Is there something in making sure that you've got the right founding team, do you think, as well?
Oh, absolutely. I mean, that relationship is so important, right? The co-founder relationship. And I think I'm just very lucky that we, timing and everything worked out where we could do this together, because she, we were essentially, running the company together, and I look over, sales, kind of business operations, all the customer facing teams, and she really focuses on product and engineering. That we come together on kind of product strategy and vision, and having that strong relationship is so important, because we actually make all decisions with everything in mind, where every company you can basically call out, okay, that's a product-led company or that's a sales-led company. And there's very, very few instances where I've seen like a really equal kind of focus on both. So I think, we're great co-founders. We happen to be married is a good way to think about it.
I was gonna say, getting that balance right. Although I won't ask if you don't agree on things, that must be a difficult period of time.
No, it's actually I mean, yeah, of course it is. And we had a baby, by the way, like 6 months ago. So and we moved, from San Francisco to Denver, all in that time frame, and obviously dealing with the pandemic and everything. So it's been super high stress. The adding a baby to the mix definitely didn't help, but we were very fortunate that, and we did this pretty deliberately. By the time the baby came, we had good leadership in place, and the team was in a pretty good spot where we were able to not like step away, but we were able to take a step back, and basically no issues really popped up, and the business is still, was still able to kind of crank while we were completely out with the baby. But I mean, it can be challenging at times for sure. But what's worked really well for us is we have that separation of duty. So anything kind of product engineering, execution of the product is if Jen has a strong opinion on it, she wins every single time. She usually wins, but and then on the sales, the marketing, and kind of the fundraising side, she leaves that to me. So we're able to work really well together from that respect. But there's, I always I can't help myself sometimes, like, hey, I think that should work this way. She's like, no, it shouldn't. I'm like, okay, all right, you're right.
No, it's good. I mean, the successful things that we seem to have on is that you have that natural kind of define, whether they're defined ahead of time. It seems to kind of just settle, that people kind of take the bulk of responsibility for areas, but it just seems that yours is really, really clearly defined. I wanted to go back to the funding, because obviously you've been through a couple of funding rounds, as you mentioned. I wanted to ask you sort of a double-edged question, really, like, how important are the right funding partners, and what to you? What does that look like to you? What does the right funder look like to you?
Yeah, it's a good one. So, I mean, our investors are incredibly important. I think investors in general are incredibly important. Really, for there's two sides to it. There is what they can do for you and what they can enable, and how they can support you and the business through every stage of growth. And then there's also the getting in your way unnecessarily, which I've just heard horror stories in this industry around not so great investors being there from very early stage and having too many inputs and kind of opinions on how the business should be run. So there's that delicate balance. And then I think ultimately on fundraising just overall, one thing that was really kind of interesting to me and that kind of clicked over time was because we originally weren't anticipating taking on any outside capital. We were planning on staying bootstrapped and not having that, not having that unnecessary influence is what I was thinking about at the time. And my opinion changed over time for a few reasons. One, there was the thought of somebody else coming into the market that was well funded at the point that we proved our product market fit and wanted to buy, and someone else that said, hey, I see that, like, we can do that too. Creating that moat is a lot harder when you're funded over your checking account. You're not able to pull that headcount forward and take a bunch of kind of intelligent bets along the way. So being able to pull that headcount forward because we grew from 6 to 60. We're 64 today. We grew from 6 to 64 over the last 12 months. We couldn't have done that, self-funded.
Yeah.
So it creates an opportunity for you to go and capture up as much market share as possible and really refine and double down on the idea and the kind of broker ecosystem for us.
Mm-hmm.
And the other piece was not having control and kind of oversight in a way for the day-to-day operations. We want to make sure that was not part of the equation.
Mm-hmm.
And then the other kind of knock-on effects that we didn't really anticipate were, right now we're hiring a head of product and a head of engineering without having done our Series A and without having raised 36 million over the last 12 months. So we're well funded, and we have marquee investors like Mark Benioff, Lord Gill, David Sachs. Like, without having those, a lot harder to go out and find a very senior product and engineering lead. Really finding senior leads at all, it's a lot harder to pitch somebody to take a pretty big risk on a new company without having those investors and really the cash in the bank. So there's all these kind of knock-on effects that I didn't quite see before, having not gone through this, which I would consider to be very important learnings for us.
Mm-hmm.
But anyway, so on the partners that we chose, we really wanted to bring in ex-founder operators that really understood what we were going through at that stage and really every stage of growth. And we did exactly that. So our seed was led by Alod Gill and Ray Tonsing from Cafe Capital. They both seen a ton as far as building companies, scaling them. Whenever we had kind of stupid new founder questions, they were really perfectly suited to one, say, don't worry about that, or you should be thinking about this way. So really it's folks that you feel like you can trust. It's really hard to build that trust over a short period of time with new investors, and especially when you're doing everything over Zoom. We still haven't met a single one of our investors, which is kind of bonkers.
Wow.
Well, I mean, those couple of them I knew from before, but over the last, since we started the company, we haven't actually seen anyone. So building that trust can be very difficult, but I think having enough conversations, you can get a better sense of, what the motivations are, and also doing other founder references is really important. So talking to other founders within, that investor's portfolio. So that trust is going to be incredibly important, because you want to make sure that they are just going to be helpful and they're not going to, try to get in your way unnecessarily, if that makes sense. And I think we've been able to do that through really thorough monthly investor updates to kind of report out how things are going. We have all the high level stats on the business, the problems we're trying to solve, and things like that. So I think we've done a pretty good job of striking that balance between the two. The other thing that's going to be really important is network. So making sure you're almost over indexing on finding investors that have a great network, have a reputable kind of brand and name. So when you do run into an issue, they're not able to help you specifically right there, or they're able to plug you into their network of folks that have maybe tackled this specific issue. So that was super important. Then also having a brand recognition for recruiting also should not be underestimated. And then terms, deal terms is always the big one. I think doing it from San Francisco, most of our investors are based in San Francisco, and being able to tap into that market, we're able to get what I consider to be really great terms. I think the VC kind of market and game is expanding beyond San Francisco pretty quickly, which is really great to see. But yeah, terms is also one worth noting.
Yeah. No, it's interesting. Really, I think that networking piece is really important. But obviously, my bread and butter, my day job is the recruitment side, and absolutely right. I mean, one of the things that I get asked all the time, I work with a lot of kind of seed and Series A businesses, and it's a challenge, because and the first thing people want to know is, obviously not just how much capital, where's it come from, who are the investors, and there's a view, particularly in the space, my space is insurance, and there's a lot of kind of emphasis on people that understand the space. So insurance has quite often is fairly slow. It's a slow burning market. It's a fast follower market. It's not a kind of first mover market. And so therefore, some of these businesses take time to build up. So it's like, do the investors understand that? Do they, so it's really interesting how much that plays into, whether you can attract the best talent, as you're saying. And of course, the other thing is that finding the right talent is expensive, and reassuringly so. And sometimes that's difficult when you're a startup, and you've got to have those conversations. And I know in our dreamland, we always want to get these people that are just committed to the journey and they're on board. And I think people can bang that drum too hard, and it's like, look, if you're the founders and it's your business, then obviously you really want it to be successful, and the greatest lion's share of that success will rightly come to the founders and the early investors. But I think sometimes we can overplay how much it should mean to the people joining the business, because they're looking for interesting work, they're looking for interesting roles, but they're never going to be as invested in that business emotionally as the people that found it. And certainly in my experience, sometimes there's a disconnect between people's expectations of how committed people are from that point of view. And unfairly, I think people sort of hold it against someone that, oh, they wouldn't run through a plate glass window for us. And I'm like, do you expect them to? Like, these are great people. They've got loads of options, So, but yeah, that recruitment piece is really interesting. I wanted to actually, I want to jump onto that actually and talk about recruitment. I know about building teams, but just for 1 second, we mentioned it earlier that tech's in a bit of a bubble. Do you think specifically InsurTech is in a bit of a bubble at the moment, potentially?
No more than anything else right now, and I'd say it's mostly tech right now, and within that's fintech, insurtech, and reg tech, everything. Mostly because in the pandemic, it's you don't want to go into manufacturing because there's just tons of just a nightmare of issues in a bunch of other industries, but manufacturing, shipping, you name it. But there's I think once we get out of the pandemic, there's going to be I think more of a redistribution from tech to other industries as things come back online. There's just so much more money out there right now. If you think about the amount of liquidity that's kind of hit, investors are going to put it right back into the market, right back into startups. It's pretty bonkers if you count the billions of dollars that have come out just in the last 6 months or so. So there's definitely, I think, a hotness in insurtech right now, but I wouldn't say it's more than any other area of tech. It's one area that is ripe for innovation, and there's a lot more demand. So I think right now is a really great time because there was this kind of forcing mechanism with the pandemic to move from brick and mortar, doing everything on paper in person, to having everyone remote. And to have people remote, you have to have technology to be able to support that. And there's been the shift away from doing things in person to doing things online. That's always going to drive a ton more demand around technology, and we're seeing that get picked up in a bunch of different ways, but really through through taking capital on from venture capital. And there's just so much money floating around. It's hard not to. But I wouldn't say there's a bigger bubble by any means in insurtech. Just a bubble everywhere.
Yeah, no, I think that's a really interesting point. And I think the big thing for me is the culture shift as well. Like, insurance has always been a very face-to-face business. Even from the consumer perspective, it's not that far removed that everyone kind of went to their insurance broker and they the people are only just kind of moving that way. And then you look at the kind of actual mechanics of the industry, the kind of internal tech. It's a seismic shift to say, right, everyone has to work remotely. And it was always going to need something like that, and it's happened. So it's inevitable that there's a focus on kind of using tech better. One more thing I want to say on that topic. So there's one thing that it's hard to remember now, given everything kind of the market exists today. But when we went to go out and raise capital for the first time, it was like June of last year. Feels like so long ago. We were
we were terrified that we weren't going to be able to raise capital on this. Every founder I've talked to that is founded insurtech or it's in the space couldn't raise from at least like Silicon Valley venture capital. There are, there's private equity and a bunch of other kind of angel routes that you can take, and that was, until recently, that was the only option available. And usually get just really shitty terms. You'll have, again, going back to some of those horror stories, heard private equity firms that, will take like majority board control up front and just get way too involved in the day-to-day operations. So I think it was only until recently that you can demonstrate that, that insurtech was a great place to put VC money. And if you just look at the insurtech VC deals over the last like 5 years, you'll probably see a big uptick. You'll see a big uptick in every industry, but there's definitely more appetite for VCs and really investors overall in insurtech. I think there's enough data points that Lemonade is a really great example where pretty fast turnaround from when they took on capital to when they went public, but a couple other examples out there. But it's seen a little bit more mainstream now, and the fact that we were able to get some pretty marquee investors to invest early on was, I think, a testament to that.
Yeah, no, you make a really important point actually. That it's not just momentum. Yeah, we've got data points we can point to saying, look, this is a good space to invest in, and now there's more popping up every minute. These are sort of big, particularly unicorn-sized companies. But I wanted to talk to you about teams. I know this is really important to you and your wife about kind of building teams. And I always talk about team building where like culture meets values. That's a big thing for me. But I wanted to get your view on kind of what you guys are doing around teams, because I know you've got some kind of initiatives that you're trying to, you're trying to build the business in a certain way. So just get your take on that, and then we can probably talk about some specifics around culture. Because you're particularly trying to pursue having more female engineers, but you've got a massive advantage because your CTO is your wife, and that's a huge thing. But you seem to have some quite strong views on kind of building teams.
Yeah, so I think overall what we're trying to do is really have a culture, and I think we're at this point right now. It's going to be kind of ours to make sure we maintain over the next year or 2 or 3 years. But we've built a team that has an incredible amount of focus, but also loves to laugh and loves to have fun, and humor is actually a really big part of that, because for the subject matter that we're working on, like you have to laugh a bit and you have to have fun doing this. And we're tackling an unsexy problem in a really interesting way, building very modern technology around it, and just hearing the relief in our customers' voices every day when we're working on a problem specifically for them that no technologist has ever worked on. That's helped us feel really great about the mission and what we're doing, and that we're actually creating something that's very valuable in the industry, and then building a team around that's having a lot of fun doing it. So we're been very deliberate from day one on a couple things. Like one, just the bar for talent needs to be incredibly high, and for example, we're looking for really kind of experienced, intelligent people from kind of every walk of life across every industry. And at the same time, we want to make sure that we have a no assholes policy right off the bat, where we could find a salesperson that if we know they're going to hit 200% of the number every quarter, we still would never hire them if they were a shark, or if they were going to be a risk to our culture at all. So we're very deliberate about the folks that we want to bring on, that share our values, that think about really think about the work-life balance also in the same way, and that's something very important to us. But the other kind of big component, which you mentioned, is a focus on diversity from day one. It's not just something we tacked on later on. It's not something you can fix later. It has to be kind of ingrained into the hiring processes from day one. And so Jen and I have in our careers have seen this play out too many times, where if you don't have enough different voices and different personalities at a table and making decisions, the quality of your decisions erode over time, where you have great mix of gender, kind of ethnicity, geography, kind of what school that person went to. You have that diversity of across these different people that translates directly into the quality of the product or customer service, or our ability to go to market. So if you get a very homogeneous group in a room that went to the same school, same background, same gender, same race, you're going to get pretty homogeneous ideas coming out of there. So, we see it as a strategic advantage to build a team that's very representative, not just of our community, but just representative of our customer base. Just kind of our really our customer base and our community at the end of the day. But we've done that through building very diverse pipelines of candidates going into it. And it's something that's very difficult and takes a lot more time and dedication to it, but making sure that when we're going out to hire a role, that when the team's interviewing, let's say 5 candidates, that those 5 candidates are have that representation of what we want the company to look like. Because if you don't have that, you can't, we're not going to make decisions on at the end of the day, okay, well, we need another person like this race or this gender. We do it at the pipeline stage, and the rest will take care of itself if we do that correctly. So that's been a huge focus to us, and it's actually created this really interesting advantage when it comes to recruiting, which I wasn't really thinking about, where we weren't thinking about originally. But we're starting to talk to candidates who've read things in the press or heard a podcast like this where we talk about diversity, and we're very open, deliberate about it, and that resonates. Where we can attract, for example, our product engineering team is majority female, which is super rare, and in tech, or probably like every industry. And so we're able to attract, the best and brightest women who might not be, feel as comfortable on their current team or, another role they're looking at, because, we've created this diverse team where they truly feel like they can come in, they can be themselves. They don't have to be a different person at work than they do in their personal life. Their ideas are heard. They have psychological safety, and really feel comfortable voicing their ideas and not worried about any repercussions or fitting in, because they have a representative group around them. So if you're the only woman among a team of 20 male engineers, you're not gonna feel super comfortable voicing your ideas all the time. But we've created this nice working environment where everyone who joins us has a bunch of other people that they can look like them, talk like them, and it creates this culture from day one of really like inclusion, people feeling at the end of the day, the most important thing to me is actually having people be themselves at work, the same people that are at work as they're in their personal life. And that's just this dichotomy I've been struggling with most of my career. I'm can be kind of brash at times. I'm covered in tattoos. I've had to filter who I really am at work, and it's not a great place to be. You don't feel like you can be as productive, as efficient if you're spending a ton of time trying to filter, who you really are.
Yeah, and there's so much there that I want to unpick slightly, but I'm conscious of our time, so I won't unpick it too much. But one, I wish I could I will cut and frame. There's the section at the start of the pipelining thing. I wish more people understood that. It's hugely time consuming, but there's so many times I'm having the conversation with a team going, we want a more diverse team, and then you look at the team and the bare bones are not diverse, and then you always got a struggle to start with, because one of the best ways to go and find diverse talent is ask your team. Female engineers tend to know more female engineers than male engineers do. And that's just a kind of really rudimentary thing. Like statistically, that holds true. So, if you're starting with the bad kind of foundation, or not bad foundation, but if you're starting with a foundation that's not representative of your either your workplace or your community or whatever, then you're always going to start from a kind of a poor start. But it's not easy, because that's my question for you is like, how do you hire at scale with the investment that you've got and at speed, and still stay true to that, and presumably that's in the pipelining, because otherwise you'd never be able to do it.
Oh, absolutely. Yeah, we're hiring 3 to 5 people a week right now. We have been for a long time. So we're doing this at scale. We're doing it through. We have a really great head of talent who has really great strategies for how we do this, and we have to be very, like, she'll hold our feet to the fire to make sure that we don't, even if we need a role really badly, that we wait until we have that pipeline in place. Otherwise, if it's slippery slope. Once you make a couple exceptions for speed over like what you're trying to accomplish, that starts shifting the mix really quickly. And then once the mix shifts, it's really hard once you have a panel of, let's say, one type of engineer, not to like pigeonhole everybody into just thinking this way, but I think data points has proven that you have 5 people of the same group, from like race, ethnicity, gender, you name it. They're probably going to pick folks that look more like them or talk more like them. So doing that from day one is so important, because every decision making around these roles is really a team effort. We have all the key folks on the team interview every candidate we bring in, and we take everyone's feedback really seriously. So if we start from a homogenous place, we're going to end in a homogenous place. But if we start from a pretty well balanced place, we're going to continue that balance. But you got to be very deliberate. I mean, it's hard in Denver. Denver is not the most diverse market to hire in.
Has that decision on that commitment meant that you've had to? I know obviously the pandemic's happened, but did you have to very early on make the decision that you're going to be more comfortable with remote working? You're going to enable that kind of more, because otherwise, if you're based in Denver, then as you say, like, it's only going to be as diverse as Denver. But did that kind of play into your thinking how you set the business up?
Yeah, so we were remote from day one, mostly because we couldn't afford folks in San Francisco when we were funding our checking account. But we hired folks kind of all over the U.S. And we've continued to do that. And when we made the decision to move from San Francisco to Denver, we did want to centralize the employee base in Denver, but still have a decent chunk of our employees that were remote. It's kind of funny because the last year we've had 80% of our employees are in Denver, and I think I've only met in person maybe like less than 10 out of the 60, four people. Wow. So we're all remote, really at the end of the day. But we did want to have an employee base that was centralized here, so that when the pandemic does end, we can bring everyone into an office. I am a big believer that having that face-to-face communication, or at least a decent amount of it, is actually really important. And it might just be me kind of personally projecting, but doing everything over Zoom is definitely not the same. And I think there's a lot of loss that happens there. So while we continue to have a remote workforce where, especially hard to find product and engineering talent, we will, we'll if somebody's amazing and they fit exactly what we need, we'll hire them kind of wherever they are. But we do want to have at least the majority of our employees here, because it's a lot harder to switch back. Let's say we ended up doing 50-50 remote, 50 remote, 50 Denver. Once we do go back to an office, you lose a little bit of that the opportunity to be face to face if the majority of the employees aren't there.
And you do get a bit of them and us, the people that are in the HQ and together face to face. It starts to kind of be a separator. I think it's going to be a real challenge for people once we kind of, London's starting to open up now. We're starting to see people go back to work, and it's really interesting because there's definitely a kind of a struggle, because some people have, really excelled in lockdown in terms of work-wise. They've liked being distant, they like being remote, but now they've been pulled back to the office. Well, what does it mean for them? There's people like myself where I really miss that face-to-face contact, because my biggest thing is taking briefs from clients and saying, what do you need and what do you want? And having those conversations. Just something gets missed over Zoom. It's just harder. There's, it's that non-verbal communication that you kind of see the excitement of someone. One of my clients is reporting back about, a candidate they've interviewed, or what they did like, what they didn't like. And I think there's a nuance that you just can't get over Zoom. So I'm desperate to get back, but I appreciate that not everyone's the same. So getting that balance right is going to be really challenging.
Yeah. I mean, there's no replacement for having a meal with somebody, whether it's like a sales, recruiting, I mean, you name it, type of conversation. There's technology can't fill that gap, at least not yet.
Not yet.
And there's the other thing that we've been thinking about is having this, there's, as people are getting Zoom fatigue and doing everything over Zoom, there's a growing kind of, in the beginning, I think a lot of people are excited that, hey, this is a whole new kind of world of possibility where I can be 100% remote. I don't need to leave my house. I don't even have to put on pants for like my work day, right? And over time, as people start doing this over and over again, like, holy shit, this sucks, right? So there's a group of people still probably love it, but there's enough people that see having the option to go into an office is a huge advantage. So I think for us, we want to make sure we're providing both to our employees. But having that option is actually something that we found is really interesting to candidates, where a lot of, especially these big companies, are just giving up all their office space and they're going to full remote. I think that we're going to be able to compete with them in a much better way, having a place for people to go into and create that community and have that real-time in-person collaboration.
Awesome. Well, I'm not going to overstay my welcome, man. It's starting to get dark in the background, so I probably should go before we hit midnight. But no, thank you so much for your time. I really appreciate that. It's super exciting in business. The speed at which you're growing is something else, and doing it in the midst of growing a family at the same time. I take my hat off to you if I was wearing one, but I'm really excited to see what you guys get up to. So no, thank you so much for being a guest. I really appreciate it.
Yeah, thanks for having me. Great conversation, Alex.
Thanks, man. Bye.
See you.